Hello, and welcome back to the TakePropips YouTube channel. In this video, we'll explore the order management dashboard and show you how to manually enter buy and sell trades on the TakePropips Trading Management Solutions EA. So first, let's load the EA to the chart. In order to open manual trades, we'll need to determine the pair we want to trade with and then click the buy or sell button. In this example, we'll open a new trade for AUD/USD. Now, you will see the order management dashboard. Let's break down each sections and explain these in more details. The order type is used to determine whether you will be opening a market order or pending order. So what is a market order? Market orders are the most basic yet essential type of order in trading. When you place a market order, you're buying or selling a currency pair at the current market price. It's instant, straightforward, and perfect for traders who want to enter or exit the market immediately. Speed and simplicity, market orders are executed quickly, making them ideal for fast-paced trading environments. Best for active trading. If you're looking to capitalize on short-term market movements, market orders are your go-to. Monitor market conditions. Since market orders are executed at the current price, it's important to keep an eye on market volatility and liquidity. Now let's take a look at pending orders. The pending order allows you to set a specific entry price target for your order, and once the price hits this price target, then the broker will automatically execute a market order for you. Notice that when you select pending order, you can adjust the entry price by entering your target price manually or by dragging this line on the chart. You can also set the expiration date to so when the price does not hit your price target within a specific timeline, then it will cancel your pending order. There are four main types of pending orders. Buy stop, an order to buy a currency pair at a price above the current market price. Buy limit, an order to buy below the current market price. Sell stop, an order to sell a currency pair at a price below the current market price. Sell limit, an order to sell above the current market price. These orders allow you to anticipate market movements and set your strategy in motion automatically. For this example, let's first choose market order. Next, we move on to the stop loss calculation. First up, what is stop loss, or SL? Think of it as your trading safety net. It's a level you set that automatically closes your trade when the market hits it, helping you cut potential losses. The beauty of the TakePropips EA is the variety of ways it offers to calculate and set your SL. Now, let's talk about the different ways you can calculate your stop loss. We've got three main types: supply and demand, ATR multiplier, and manual points. The manual points is a straightforward approach. Manual points allow you to set a specific point distance from your entry point as your SL example. Let's say you want to set the size of your stop loss to 50 pips or 500 points, then you would enter 500 on this field. As you can see, once you enter your desired points, it will automatically update the stop loss lines on the chart so you can see how far the stop loss is from your entry price. You can also adjust the stop loss manually by dragging the red line on this chart. Next is the ATR multiplier. The average true range ATR multiplier uses market volatility to set a dynamic stop loss. It adjusts your SL based on the current market conditions, providing a more flexible approach. If the market has a high volatility, it means you will require a wider stop loss because the price swings are larger. This is to avoid prematurely hitting your stop loss if the market is experiencing larger price movements. If the market has a low volatility, then you can set tighter stop loss as the price swings are smaller. When you select ATR multiplier, then you will see additional settings that you can configure for the ATR calculation. You can modify your own ATR multiplier, ATR period, and the time frame to calculate the ATR. Next is the supply and demand. It sets your stop loss around key support or resistance levels, which are essentially the points where the market has historically turned or paused. Imagine these are like floors and ceilings in the market, points where the price often stops and changes direction. By setting your stop loss around these levels, you're using what's happened in the market before to decide where to place your safety net. In this example, we'll pick the supply and demand. Now let's move forward with take profit calculation. First things first, what's a take profit? Simply put, it's the opposite of a stop loss. While a stop loss limits your losses, a take profit locks in your profits. You set a point where, if the market hits it, your trade automatically closes, and you pocket the profits. The first method is manual points. This is pretty direct. You choose a specific point in the market to take your profit. Say you enter a trade, and you decide that if the price moves 200 points in your favor, you want to take your profit and close the trade. That's manual points. You set the exact profit point yourself. You can also adjust the take profit manually by dragging the green line on this chart. Next up is the ATR multiplier. Just like with stop loss, ATR here stands for average true range. This method uses the market's movement to set your take profit. If the market is moving a lot, your take profit might be set farther away to catch more profit. It's a dynamic way to adjust to the market's pace. Last but not least, we have the risk to reward ratio. This one is all about balancing risk with the potential reward. For example, if you set a risk-reward ratio of 2, it means that your take profit will be twice as large as your stop loss. In simpler terms, your potential profit will be 2 times larger than your potential losses. It's a great way to make sure your potential profits are always more than what you're risking. Next is the lot size calculation. First up, what exactly is a lot size in Forex trading? Think of it as the amount of currency you're trading. Getting this right is super important because it directly affects how much risk you're taking on with each trade. The first method is manual lot size. This is the simplest approach. You decide how much you want to trade and set it manually. For example, if you're comfortable with trading 0.1 lots, you set it, and that's what you trade each time. It's straightforward and consistent, perfect for those who like to have full control and simplicity. Next, we have the risk percentage per trade. This method is all about managing risk smartly. You decide what percentage of your account balance you're willing to risk on each trade, and the EA calculates the lot size for you. For instance, if you don't want to risk more than 1% of your account on a trade, the EA figures out the lot size that fits this risk. Lastly, there's the risk amount per trade. Similar to the previous method, but instead of a percentage, you decide on a specific monetary amount you're comfortable risking. Say you're okay with risking $50 on a trade, the EA then calculates the lot size that corresponds to this risk amount. Once you set your lot size, you will also see the total amount of your potential losses and potential gains with this specific lot size. Next is the trade protection, which allows you to set the trailing stop, break-even stop loss, and partial close for this particular pair. It's a way to automatically manage your trade and reduce potential losses and maximize potential gains. We will create a separate video explaining these options, so stay tuned for that. For now, we will leave them as is. Next is the current trade signal, which allows you to match your trade setup to the current trade signal. It will automatically set your entry price, take profit, and stop loss based on the current trade signal shown on the chart. For example, if you hit Show TP3, then it will auto-adjust your trade so that it matches the values directly on the trade signals. We will go more in depth of the trading signals in our future video, so make sure to subscribe so you don't miss our uploads. For now, we will not use this and just use our previous setup. Lastly, we can insert comment on our trade so we can refer to it later if we want to. Now, let's submit the order to open the trade. That's a wrap on our deep dive into the order management feature of the TakePropips Trading Management Solutions EA. By mastering these settings, you're not just trading, you're strategizing for success. Don't forget to like, subscribe, and hit the notification bell for more insightful videos. If you have any questions or insights, leave a comment below. Happy trading, and see you in our next video.